AI Edge podcast and networking event. It is our first one using the Social Lift platform. We are a AI business accelerator that helps companies get to their first 1 million ARR and then 10 million ARR. And for the enterprises, we assist with enterprise AI transformation. We have in our podcast Aradhna Mangla, and she is a senior manager of over AI and data for the financial services industry for Ernst & Young. It is a privilege to have her with us today, and we are very excited. Aradhna, she is a very skilled. She has a background in AI governance, strategy, and she has worked for some of the largest companies in the United States, working together with chief AI officers, CDOs, over 30 of them. And she works in the intersection of data architecture, fiduciary accountability, and large language models in large financial institutions. We have the privilege of having her today. She is a expert in Snowflake, data, AI governance, and also a big advocate for women in fintech. Radna, thank you for being in our podcast today.
No, thank you, Stephen, for having me. And I'm really excited about the topics that we'll cover today. Especially like AI governance and the kind of frameworks and methods that I've been able to develop. It's a very exciting space that we both are in. And I'm sure that some of the, people who will be watching this podcast and will want to network and hear more about these. So excited to dive in.
Very good. And to introduce the topic a little bit today, we're going to be talking about AI's future in wealth management and governance. And we're going to explore the critical role of AI in financial services, from advisor co-pilots to ethical governance and ROI measurements, things that Aradhna is deep in and has a lot of expertise in. So to get started, let's talk a little bit about how AI adoption has, how has it evolved in the area of wealth management in the past decade in financial services? You've seen it grow. You've been part of the growth. Tell us a little bit how it's evolved.
Yeah, Stephen. I mean, this is such a great framing question because over 10 years, my God, the amount of changes have been immense in any industry, but in wealth management specifically, right? If I were to say the first 3 years were all about collecting data and making enough data available to wealth management firms so that they could make better financial advice, better financial decisions for their clients. And from there, we came to this point of synthetic data and really mocking up the data for your clients. You don't just have to collect and gather so much data. You have to now centralize it and store it and make it more accessible to your data scientists, right? That's probably like year 6 in the 10 years. And now in the last 4 years, I would say, you have some data, it's maybe all over the place, it may not be as centralized as you want it to be, but you have better data about the clients that you serve. You have segmentation models, you have context about your clients, and the better you build context about your clients, the better you know your clients, and the better the wealth management firm operates and grows, right? So that's where I am seeing the industry trend. Like, it's not just basic KYC and collection of data, know your customer. It's not just centralization and building the best data architecture for that data. It's now about context engineering and really, really knowing the deep nuances of micro segments and not, oh, these are people between 30 to 40 years of age. No, that's not going to work anymore. It's about how do these 30-year-olds think about money, what is their money emotion, and what do they want from their advisor? Like, that's where we are today. And I think it's like a very multi-layered people, process, data, and technology problem that we can discuss more.
And it was, we have a business that has an NRA accelerator, wealth management business. They're independent. advisors. Where do you see the applications with AI helping them out? Right. So he came to me and said, Steve, I want to do this for my own business, like build out AI agents, build AI software. Uh, let's envision the future together, and then I want to create the software and sell it to other people. Um, so, what advice you have for them? What are the leading use cases that have been really being used by wealth management today?
Yeah, the top use case I would say is, and it's the highest value use case because it's operational nature, is advisor productivity. So ultimately, every wealth management firm has human or agentic advisors, right? These are the people who talk to you and me and tell you that, hey, you should invest some of your portfolio in stocks, some of it in mutual funds, some of it in, 30-year-old bonds, or some of it in 529 plans because of your financial conditions and your goals and your plans, right? And these agents need to understand how to act like a human advisor, how to augment a human advisor. In some cases, some firms are even replacing human advisors. So it's an interesting ecosystem that we are going to be living in the next year and a half, I would say. I would say that the biggest use case, biggest productivity use case, operational use case is advisor productivity, because you spend so much, so much, so much time in forms, you spend so much time in admin, you spend so much time in making models and calculations. And honestly, like that is kind of a not a waste of time. I feel like that is the time that you can accelerate. And what about pre-filling? What about, pre-knowing your client? There's so much information that we leave on the digital interwebs, right? There's so much information that third-party data brokers have on us. And there is definitely an ethical boundary here that we don't want to breach, which is why AI governance is important. You don't want some agent to go and crawl some information on you that is biased and make adverse portfolio recommendations for you, and nobody's catching that happened, right? It's just so autonomous at some point that you just don't know when to stop, when to start, what was the data that was used. So I think advisor productivity is very important, but it's a complex problem because you don't want productive decisions to be made without having any governance and guardrails in place.
Yeah, I like that. I think that's going to be a big one. And something you mentioned that we had a discussion about was, I think a hard part for people, especially when they're trying to find a new advisor, is when they um, go try to meet new ones for the first time, and then they get asked all of these personal questions, like how much money you have, what are your goals, and they kind of feel in a way violated. It's like, who are you, and why am I going to give you all this information? And then I don't even know you. I don't even trust you. Uh, do you see AI replacing a lot of that part so people feel more comfortable talking to AI agent to a person and then getting better advice that way to start the process? Or what's your thoughts there? You're into this. That becomes more of a replacing humans with AI to start.
Yeah, and that's such an interesting question, right? And the answer depends on which segment of the population you're in. So if you think about the Gen Z and the millennials, right? I feel like digital natives are more comfortable giving their information to this, you know, no face, like this faceless AI or digital entity. Imagine so many forms that we fill, right? So many lists and quizzes and so many fun things we do online. And we give our data to Instagram, right? We give our data to so many different portals. We don't think a lot about it. Um, and similarly, I'm noticing that there is a trend that, younger customers do prefer getting faceless advisors that they can just like input their data into, like forms that just transform easily for them. They input their information. It's like a nobody's really judging them in that moment, right? um,
Yeah.
and then they're done with it. But if you go beyond millennials, right, if you go above, these are people who and I'm making broad generalizations, right? Like I think there are some statistical anomalies here that you will see if we do like a deep sector research. But on the whole, the older you are, the more you are like a lot of this digital financial advice is new. It wasn't what your father grew up with, what your mother grew up with. You used paper checks, you used prospectuses, you had stock bond securities, etc., being sent to your email. There was a lot of physical paperwork that you were used to, and you walked into a branch. You met with a person, you knew your advisor, that advisor knew you brought your kid into the branch, right? That whole experience, that is something that most people cherish, really, because it had that human element, that empathy, and the times that they lived in was different. So when you think about this aging population, especially in the US, right, they are thinking about transitioning into the next phase, right? When they think about transitions, they're thinking about their estates. There's estate planning. There's 1 trillion or something in assets that are going to be sent to the younger, working population in the US. There's a huge demographic transition at place. These people in that age group have so many complicated financial relationships gathered over 30 plus years of working and living and doing, right? They cannot just hand it off to a digital agent and expect that agent to use the same form that worked for a millennial customer to work for them. They have much more complicated household relationships. They have kids, they have kids of kids, they have partners, former partners, they have business relationships. So it's totally different from a millennial with just a mortgage and a kid on the way. So again, I think that it depends on which segment and age and stage you are in life and how complicated your financial picture is, which is, all the assets, liabilities, relationships that you have. And again, that brings you back to the governance point as well. When you have this much data on your client, what do you do with it?
Yeah, I that we need to tackle that one. As you one before I get into the architecture and the deep dive there, the other thing that came to my mind, so you is uh, ChatGPT or Claude. Like what I've seen is talking to people, and I do it myself before I go and invest in a mutual fund or stock. I'll actually take a picture on the screen and then ask it to evaluate and give me options, and it goes through the whole analysis, and I'll do that before making a purchase. Versus maybe some of the money managers now, they're just trust me, I got it. Or I don't have any time. Here's a quick blog post that says how to pick your investments. um, do you think that ChatGPT and a Claude are going to start doing some of that investment money management? Or do you see, because I mean, you can easily get more information that way, or where do you see them versus, a financial institution, right?
Oh,
How is the
such
lines going to get unblurred, or is it going to get blurred more over time?
so important, right? Could you just use one of the frontier models as your financial advisor?
Yeah,
Why should you go to a financial services firm when they have the same thing for free, right?
yeah.
And that is such a important thing to talk about. I'm glad you brought it up, Stephen, um, because it's easy and it's sort of free and non-judgmental. I think we will put those things up on any of these AI models, right? But the major thing that these AI models lack is the full context about you. They don't sit with the memory of your financial history. They don't sit with the memory of your financial goals. They give you some short-term advice, which is that point in time advice that they can gather based on industry trends, something that you've shared with them in that moment. And of course, like there are maturity stages. Maybe what you have is like a personal financial advice agent that has already been built in your particular tech stack, knows everything, reads your financial statements, reads your business statements, and is making those decisions. But I my opinion is that I feel like there is other stuff that you can't, buy. Like there is third party data that you may not be buying. There is sector research that you may not be buying. There's a limit to what you can find for free, and the provenance and the correctness of it. How much can it validate and how much can it regulate for you? So a lot of the trade regulation, a lot of the financial regulations do prevent advisors from taking wild bets for their client's portfolio. So, for example, regulation best interest, right? So, a lot of these companies, these large financial advisors, they are regulated by Reg BI and others, SEC and FINRA rules. So, anytime they make these model decisions for you, even if they are using AI models, they have to vet it. They have to have a human in the loop and make sure that that advice is geared towards your financial picture, your financial history, where you came from and where you're going. And there is a fiduciary stamp of approval behind it. So that's where the key challenge comes up. Any of these frontier AI models, they are not fiduciaries. They are not incentivized to act in your best interest. They are incentivized to get you the answer based on the research as fast as possible.
Yeah, and it sounds like financial institutions need to start coming up with their own, right? So you have I guess you called it the outlaw or the edge AI, and then you have the financial AI. Which one's the best out there? Like, is there one that's leading the troop? But like you're like, Steve, these guys know how to do it really well. Here's an AI model or AI chat that really can help people. You keep track of what's best out there and who's winning?
Well, I feel like there is no winners yet, and there are only losers, in the sense that there are, the companies that are sticking to their old ways,
Yeah.
or right, like the companies who are thinking that 1% AUM fees and monoculture of advice is fine, meaning since me and another person is in a similar age bracket and tax bracket, we both will put 30% of our money in stocks and 40% in something else and something else. We both can get a similar financial plan. That's a big mistake. So that's a company that does that and does not hyper personalize financial advice for each and every one of their clients at scale, because now they can do that. If they don't do that using AI, I think they are really losing the race. The ones that are winning the race, I think, are the ones that are using AI to streamline operations, make advisors more productive. Um, they are able to implement good AI governance practices so that when they use AI to generate financial advice, which is the second use case, they are able to stand with it, provide fiduciary level understanding, fiduciary level approvals, and fiduciary level auditability once the regulator comes back and asks them why they did something. And those are the companies that are also moving towards agentic experiences in some low risk areas, right? So, for example, simple things like, you know, password resets, or hey, I can't log into my account, or hey, I need to add a beneficiary to my account. I don't want to call into a bank. You just log in and there's an agent that just executes the entire task for you and validates it for you. You don't even have to click through multiple screens. Like that's really where the edge companies are, the ones that are truly differentiating today.
Yeah. Well, yeah, that experience of the future, I look forward to, right? And going from edge to main, and I'm sure they'll get there. They got to figure out all of the governance, and so let's talk about the data part and the governance part because I know that's a strength of yours. Um, oh, there is so much that I'm sure that they're trying to investigate of what can they do and what can't they do to make advice on these AI chat agents and how to stay within compliance. What is going on in these firms right now? Do you think is there a roadmap? Is it unclear? Or are the government policies unclear on what can and cannot be said with AI? You know, what is happening?
Well, as with every other industry, right? Any other industry that provides services to humans, um, I think the whole manual is being rewritten, meaning um, the laws that you had for advice, for financial advice, that worked during the financial crisis, after the financial crisis, um, based on scandals or based on wrongdoings, the kind of governance that was created. I think a lot of that is being challenged, and it is in flux. Like I think there are going to be the next couple of years are going to be interesting in terms of providing clarity, providing, not just the US, but globally, right? There's different levels of regulation and maturity there. I feel like the EU AI Act has been very instrumental in moving the needle for the globe. That is something that a lot of companies inspire their or aspire to follow. They make their own enterprise policies that may be a derivation, that may be maybe word for word a copy, um, but they're all iterating. I would say, Stephen, like it's not like a fixed fixed goal that sorry a fixed policy that everyone adopts right now, because there just isn't one. And you are limited by, or limited is a wrong word, I think you are on the journey of the frontier models that you're choosing. So for example, if tomorrow, ChatGPT comes out with a different model that is particularly geared towards financial advice, I think that's going to, drop, and it's going to create a lot of ripple effects, and that will cause a lot of enterprise data governance, enterprise risk officers to take notice and understand what do they have today that is approximately close to governing this and managing the risk from it. Do we need to refresh everything? Like, instead of the annual refreshes, do we do it as a short-term project and refresh every policy for the firm? And before we even do that, right, what I would recommend is a lot of these companies who are experimenting with AI sometimes don't even have a good use case inventory. So sometimes what happens is they are not proactive, they're reactive. And they have to suddenly, figure out what is being affected as a result of model change, model updates, industry changes that will affect them. And then they're just trying to play catch up. So I feel like there's no real, like, I feel like I sit with the uncertainty on this question. And I don't think there's a very clear answer for us yet, which is why it's a very challenging and interesting space to be in as well.
Oh yeah, I the other day on Facebook, an ad of a rocket scientist who figured out the algorithm to get, I don't know, XX% return on your stocks with his AI agent, right? So the it's kind of like the wild wild west in a way for people promising high returns and others trying to safeguard your investment. Well, this was great. Aradhana, thank you so much. You are truly an expert in this area. Thanks a lot for being part of our AI Business Accelerator. Finance is a track we do want to keep a tab on. We have people building applications in finance. We're looking at working with a lot of different financial companies, and having you as an expert in our team is great. So I appreciate very much for this podcast, for your time, and for those that will be listening. Can they reach out straight to you? What's the best LinkedIn? Is the best way to contact you?
Yeah, absolutely. I'm very active on LinkedIn. I publish a lot of my frameworks and methods on LinkedIn, as well as my personal website, you can always drop me a line. And another, if your readers and your listeners want to dive deeper into responsible AI and how, client context matters, I think we talked about it in very general purpose terms. But if they're academically inclined, I would love to point them to my SSRN paper that talks about exactly how, instability windows for clients can create suboptimal financial advice conditions, especially when you run AI agents through it. I think that'll be a very interesting leave behind on the finance and AI topic.
I'll send that too. And then also for those in the AI Business Accelerator, Aspen AI, you can message Aradhana and just contact her directly through our place. And then if you want to drop that paper, I'm more happy to post it in our AI Business Accelerator. So thanks everyone for
Perfect.
listening. We will conclude this podcast and networking session. And for future ones, if you come early, you get to speak with our audience, with our guest speaker, and you also get a chance to speak with them afterwards. So thank you very much.
Thank you.